Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network on location at the Nebraska Pork Producers Annual Meeting and Pork Expo taking place in New York. But we are talking cattle today and lots of things that are going to be happening within this market trade. We'll talk about this correlation we continue to see between the feeders and the corn. Where are we at demand-wise, and what's the North versus the South like when it comes to cash? And what's these rumors? We might see some plants going dark for a couple hours. We're going to get all those details today coming from Brad Kooima. Brad, of course, with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's start out with this whole corn versus feeder cattle price. Corn goes up on a midweek and definitely continue to see that drop within the feeder cattle market.
I think that's a nice place to start, Susan. Thanks for having me on, by the way. But, so if you were sitting at the Pork Expo all day and never looked at your phone to see what the quotes were, you maybe go, August cattle up a nickel, looked like it was a quiet day. It was quite the opposite, actually, in my opinion. I thought coming in here this morning, I thought, well, maybe today's the day we start a correction here on the cattle. We've seen it before when you have the sharply higher corn market, and corn has rallied 80 cents here in the last few days. That maybe today would be sharply lower feeder cattle, tap into the deferred live cattle and start a big down day, which honestly, we're maybe a little overdue for that, as overbought as our market is, of course. And so that kind of was my expectation coming in, and just goes to show how, I'm not always right by any means. And I wasn't today. I thought the market came back upon itself here awfully good, after being more than 100 lower to close, modestly higher even, and even the feeder cattle down 60, 70 cents, in the middle markets there, given what the corn's doing. I thought was frankly quite impressive. The bull market lives on, right? The old saying, a bull market dies hard, and that sure seemed like what it felt like today.
So are we seeing, and you and I kind of briefly talked about it, but is there a pullback coming from these packers? Are they saying, hey, we're not negotiating like we want, we're going to go dark for a little bit?
Yeah. And, this has been talked about for months on end, it seems like, Susan, where, well, we're going to, cut Saturdays, and then we're going to go to 32 hours. And this week is the first time that there actually has been some follow through on that threat. I know that there's a plant dark today. Now there's varying reasons. Okay. There are floating holidays. There are times where they got to do cooler cleanouts. There's even union. Some of them have their union contract that, that says they have to have these days off from now and then. So, to get down to the root of it and say that things are really, really different, I guess I don't mean to give that impression, but it's happening. I know there's another packer that's cutting a few hours per day, which I guess I've been wondering when the packer's going to try to do it. I mean, he is able to greatly influence, the number of cattle he kills. The irony of the thing is, I think for them, is coming out of COVID, remember how difficult it was for them to get their workforce back. And finally to get where they were operational again at capacity or near capacity. I think there's some risk, and I think they understand that. If they say, oh, well, guess what, guys, we're going to go to 32 hours. Well, there's plenty of jobs elsewhere, and I think they're worried about doing that. And I think they're worried a little about the economics of paying them for not showing up. And just maybe they're still making some money, procuring cattle. Okay. Boxes are still 305 or something like that. Right. Yeah, I don't know. I mention it because it's happened a little bit this week. I don't think it's anything to, put anybody on notice here just yet.
So let's put that hat on of the cattle producer to the north versus the cattle producer to the south. Stronger advantages coming to those northern cattle.
They are right now. Thank you very much.
Is that a good enough softball love for you?
Yeah. Thanks. I should have grabbed my baseball bat. I'm a big proponent of negotiated trade. You know that I believe with everything in me that the more negotiated trade cattle, the higher the price. I've had, of course, I'm a smart aleck too by nature. People ask me, boy, Brad, 188 last week in the north, huh? Yeah. What did they get in the south? Well, 178, 79, maybe a little bit of 180 if they paid the freight, yada, yada. So how come it's so much higher in the north? I said, I guess we're that much better negotiators. I know I'm offending some of the people in the south, but to me, it's a situation here where, in my opinion, you can see the difference when people are negotiating a number with a number of packers and have leverage because we are hyper current, more current, in my opinion, than we were in 2014 at this stage. Okay. And we can say no to bids, right? Because cattle are not ready. Compared to a formula deal where they're going to turn so many in on Friday because that's their arrangement. And okay. And that formula is based on that price. And the number of negotiated trade last week in Texas was just an abject joke, the number of cattle that they traded, such a small number. So I don't know. I mean, it looks to me like, yes, we've got an advantage here in the north, and I think some of it's because we're strong negotiators.
What about the weights? How are we doing right now?
Something I watch every day, or every day that there is data on that, because I think that's going to hopefully give us a little bit of a cue or clue, of how long we can expect this market to stay like this. Right now, I guess I can still say that the weights contra-seasonally are staying flat. I wouldn't be surprised if the weights in the north actually got lower, which is really contra-seasonal. Normally we get into these longer days, calf-fed days, and the cattle just get bigger. That's just what it is. I mean, if you looked at a seasonal chart of what weights do, they always bottom in June. Okay, so now here we are, third week of July, and we still haven't started to go back up. Even in 2014, the weights had started to increase already by now. So I suppose it's inevitable at some point, and there is that thing. I think you and I have talked about this before, but when does the feedlot look up at the screen and say, well, October cattle are $2.50 higher than August cattle, and it certainly doesn't cost me $1.85 or whatever to put gain on, right? Because cost of gain is much less than that. You know what? I think I'm going to put another 100 pounds on it instead of selling them real early. Obviously, that's what happened in 2015. And then, of course, as an analyst, that's something that I'm going to try to be very sensitive to. At this point, I don't see that coming, but we're watching.
So we've got two big reports that come out on Friday, and you and I are recording this midweek, so you don't have any hardcore numbers. But where are you looking? What are some of the guesstimates that are out there for this report?
There's two things, like you said. One's the Cattle on Feed Monthly Report. That's the one that people seem to like to talk about. I'm a nerd. I love the other one, the semiannual, the all cattle, the number of cows, the heifers for replacement, the calf crop. But so first things first, on feed numbers, I would suppose we'll be somewhere in the neighborhood of 2 to 3% down, like we have been. The guess is 97.6. The placement, I think, is going to be a little less as well. The average trade guess is 98.1, and marketed, because we have less cattle and a day less, is guessed at 95.2. I guess I don't have any real problems with any of those. Our slaughter level's been big enough. I don't think our marketing number will hurt us. When you look at the all cattle and calves, though, now you're talking about, are we going to see the signs of the teeter-totter, right? Are we going to start to see end of cow liquidation, stabilize the herd, start expansion, and start that by holding some heifers back? Really, really anxious to see it. Most pundits here think that all we've done is stop liquidation and that we really haven't started the expansion phase. Or maybe we have in North Dakota, but we probably haven't in Texas, right? So it'll be an interesting deal. I still think that the whole thing shakes up to be, from a supply side standpoint, an extremely fun and optimistic time for us looking forward here if you're a cattle feeder, notwithstanding whatever black swan event can happen. But from a supply side standpoint, it sure looks like we've got it set up.
Well, I tell you, I'm looking forward to having this conversation next week, when we can really go through and digest those numbers. You being, like you said, the number nerd, we should have some good information moving forward.
Yeah, well, let's hope so. Like what they say, figures lie or something like that. But like that. I think that I'm always surprised how little the market gets traded, that those macro numbers like that. But I do think they're important from a long view, and that's, I think, an easier way to analyze markets anyway.
All right, what's the best way for folks to get a hold of you, Brad?
Well, we still have a phone here, 800-358-3047, but kkvtrading.com is a nice place to hit us up here and check us out as well.
All right, thank you. Thank you. Brad Kooima has been joining us for this week's Cattle Call. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call right here on the Rural Radio Network.